Hey there, it's Jason Eichmiller, reverse mortgage expert, and in today's video, it's going to be somewhat of a short one, but we're going to go over the big changes to reverse mortgages for 2024. So in this video, again, we'll go over the changes, but then we'll also go over kind of what I've found my clients are doing now, kind of how they're using reverse mortgages and how they're applying them. And then we'll go over some of the programs that are now available that weren't available in previous years. So if you like to before we get into this video, if you'd like to get in touch with me, if you got any questions about reverse mortgages, or if you'd like to see how they work for you specifically, you can see that my contact information is scrolling on the bottom of the screen. You can reach me on my office line is 888-309-9705. Email is jason@keyhomelending.com. Or you can go to www.reversequotes.com. That's reversequotes.com. There you can see some client testimonials if you look to the bottom, both in letters and interviews that I've done with folks that I've helped. And then if you'd like to put your information in to pick a time to chat, then on desktop, the form submit is on the right. And on your mobile phone, if you're visiting from your cell phone, it should be right to the bottom of my little introduction video. So that's how to reach me. And I've done these reverses since 2008. Seen a lot of changes in the reverse mortgage world. So I'm just more than happy to help you, and I'll do everything that I can to do my best to help. So first things, let's talk about some changes that have been made in the reverse mortgage program. So one of the first things is that the maximum reverse mortgage loan size has increased. In 2023, it was one, and by loan size, I mean the maximum home value. So with the HECM, which is the FHA reverse mortgage program, in 2023, the highest home value that you could have, or the highest home value that they'll give you credit for having, was $1,089,300. Now in 2024, they just upped it because with inflation and everything else, prices for everything are rising, although we've seen a decent amount of cooling off in the housing market. But with that said, anyway, the maximum home value is now $1,149,825. And that is a difference of, if I do my math very quickly, that is a difference of $60,525. So what does that mean to you? Basically, what it means is that that is the highest home value that the FHA will give to your house. So if your house is worth $1.149 million or it's worth $3.5 million, the FHA for the HECM program is only going to credit it at $1.149 million. But imagine if your house, remember in 2023, the maximum home value was 1.089. So what if your house is worth 1.12 or 1.14? Well, that just means now that you can take advantage of the full value of your house. And if your house is worth a little bit more, you can take advantage of a little bit of higher percentage. Basically, loan sizes for you, in that circumstance, the loan size will be higher. Now there is, and we'll talk about it a little bit later, but there is always a proprietary reverse mortgage that isn't FHA, although it still gives you the same non-recourse protections, basically meaning that if the house goes underwater, you and your heirs aren't responsible for it. And that proprietary reverse program has no upper end. So I've done them for $5 million and $7 million homes, and we can actually use that value, which is awesome for folks, again, with higher home values. So that's one. That's change number one. Number two, let's look at loan sizes. So let's say apples to apples. Let's say you've got a $400,000 house or an $800,000 house or a $200,000, whatever your home value is. Since October, the HECM loan sizes have increased by about, and again, it depends on your age a little bit, and it depends on the home value in your state, but on a whole, or as a whole, they've increased by about 10%. So if you were able to get 330,000, or let's say easy numbers, if you were able to get $300,000 in October, then now you're able to get a little bit more, somewhere around $330,000. And that's with the exact same home value. So again, with home values being increased and with loan sizes increasing, we're looking at better, basically the reverses are looking better now than they were in Q3 and Q4 of 2023. And that means personally, me, I can help more folks, and the folks that I can help get a greater benefit out of it, which that's what I love to do. That's what really drives me in this business, is helping folks as well as I possibly can. So just real quick, word to the wise, if you got to reverse, and I've got clients in this boat, if you got to reverse last year from say July until November, then they do make you do have to wait at least a year to refinance these. But I want you, if you want to get a little bit more out of your house, whether it's to get some cash or just leave money in a credit line, come July to November of next year, actually before that, reach out to me and we can take a look at how much more you can get now. And again, they do make you wait at least a year to refinance these reverses, but we can take a look at where it'll be in that year and what I expect. And no magic crystal ball here. I broke it last week playing soccer with it with one of my kids. But if I had a magic crystal ball, I'd say that over the next year or so, especially with the elections, we'll see interest rates drop, which means, as you've probably noticed if you watched my other videos, as interest rates go down, you qualify for more money with a reverse mortgage. And vice versa, of course. If interest rates would go up, then you qualify for less money. That's why folks in Q3 and Q4 of last year, 2023, that's why they were qualifying for less money than they were qualifying for in early 2023 or 2022 or 2021. Hope this makes sense. By the way, if you want any clarification on this, I know I'm speaking generally. Get a little drink of water here. My Bringing Hope Home. This is a Philadelphia-based charity. They actually helped my mother-in-law when she had cancer. They gave her some money to afford some of her bills. So we keep a whole, and they've got a 5K in Jersey that we do every single year. Keep their bottles, keep everything. Got a whole bunch of stuff from them. Keep it, and it keeps the water cold. So if you have any questions, just let me know, and you can reach out to me again by phone, email, or put your information in, and we can take a look at approximately what you can get out of this reverse once rates drop a little bit lower, and that's if you've got a reverse back in, say, July through November of last year. Now, hope this makes sense. Now, let's take a look next at some of the special programs. Now, they've been around in the past year or so, but they are relatively new, and if you haven't seen all my videos, then you might not know about them. Plus, they're expanding to other states as we talk. So you have a proprietary reverse mortgage, which you've probably heard of. You have a second reverse mortgage, and you have a hybrid reverse mortgage. Go through these very quickly, and then I've got specific videos that apply to each one of them. So the proprietary reverse mortgage, it's outside of the FHA, but it acts in the exact same way as a reverse. Basically, you get part of your home's value in tax-free cash without being required to make a monthly payment. The proprietary reverse is held in what's called a first lien position, so it pays off everything that's owed on your title. The big difference between the proprietary and the HECM, which is the government reverse, is the proprietary, again, you don't have a home value cap. So in the beginning of this video, I touched on the maximum home value for HECMs. Now they increased, which is terrific. They've increased to 1.149 million. There is no cap on the proprietary. So a lot of times when I have folks whose homes are worth 1.5, 2, 3, 3.5, and they want to get as much money as they can possibly get out of the house, then we're going proprietary all the way. The other advantage, the other thing where proprietaries kind of come into where they're a little bit stronger of a solution than a HECM is if you need all of the money up front. If you're free and clear on a HECM, they normally give you about 60% of your home's value. If you're free and clear on a or 60% of the loan size up front, and then you have to wait a year for the extra 40%. Not home value, loan size. So if you have a $400,000 loan size and you get a HECM, then you can only take about 240 up front. And you have to wait a year for the rest of it. 240 is 60% of 400,000, by the way. That's where I came up with that. If you have a proprietary reverse, you can get all $400,000 up front. The fees on the proprietary are also a lot lower because you don't have reverse mortgage insurance. But with anything, what should you do? The proprietary or the HECM? It just depends on your needs and your situation. So that's something that I try hard to kind of talk over with you and help you understand the pros and the cons to each, and then we find the smartest thing for you to do. So that's the proprietary. It's not in every single state, but it's expanding. So if you're not sure, if you're in a state and you want to see, hey, what are my options, then feel free to drop me a line, or you can always comment below. Hey, I'm in X state. What's available? Proprietary, HECM. Well, HECM is available everywhere, but can I get a proprietary? Can I get a second? Can I get a hybrid reverse? So that is the proprietary. Let's move on to the second reverse mortgage. I've been doing a bunch of these, and the reason it's pretty clear, the second reverse mortgage allows you to keep your first mortgage. Let's say that your first mortgage, the rate, you got it in 2020 or 2021 or maybe 2019, and your rate is super low. Your rate's in the 2s, 3s, maybe even the 4s. The payment on that isn't bugging you, but you either have a second mortgage behind it, you've got credit cards, you've got bills, you want to make house improvements. I'm doing one right now where I have a client who's going to build an ADU on an investment property to rent it out for more money. In those cases, you want to just tackle what's needed. So the second reverse allows you to leave that first mortgage alone because, again, you don't care about it. And a 3% interest rate is, as long as it's not hurting your cash flow, it's damn near free money. So you leave the first alone, you just attack it with the second. And the same thing overall with the second reverse mortgage, whatever money we give you, you're not required to make monthly payments on it, although, of course, you can. The fees are pretty low, and it's a pretty easy loan to do. The downside to it is it isn't available. It's only available in a few states. So again, if you want to see what you're eligible for, then feel free to drop me a line or just comment below, and I'll let you know. The third, and again, I love the second as a reverse, especially in this world where folks have low interest rate first mortgages and they don't want to touch them. So the third program is the hybrid reverse mortgage. I'm doing a bunch of these too. And this is for folks who can't qualify. They owe a little bit too much to qualify for a traditional reverse mortgage, whether that's a HECM or a proprietary, because obviously you're qualified based on your age, your home value, and interest rates. So sometimes you might owe too much to qualify for it, but you still need the payment relief. So what the hybrid reverse does is it goes in, it pays off your first mortgage. It actually loans to a higher LTV, which is technobabble for loan to value. So we give you more money than a traditional reverse would. And what it does is for the first 10 years of it, you're making a minimum payment that's less than interest only. So you're making a very small payment for the first 10 years. Then after 10 years, it automatically converts to a reverse mortgage. So it goes from making a very small payment for the first 10 years. Normally that's lower than your mortgage payment and lower than the bills that you paid off. And then after 10 years, it automatically flips to a reverse. Now, bringing hope home again. So one thing I want you to know about this hybrid reverse mortgage, and as well as with the HECM and the proprietary, well, you know what? More importantly, with the hybrid. So you know by now that you're only making payments for the first 10 years and they're small payments. However, if in the future interest rates drop and your home value increases, and sometimes that happens, historically that happens when interest rates drop, house values increase a little bit. If you're able to refinance it into a traditional reverse mortgage before the 10 years is up, hey, that's all well and good. We do this every day. So, and also for folks, if you need to get if you're getting a reverse right now, but then you say, hey, you know what, rates are a little bit high, what can I do in the future? Then we always look at this, and for every client of mine, I'm always kind of my eyes are on the prize, if you will. So what we do is we take a look at where interest rates are and where loan sizes are, and if you can benefit by redoing your reverse mortgage in the future, whether it's to take a hybrid to a reverse or get more money or a bigger line of credit out of your reverse, then I'm all about it. And we'll do it, and we'll do it very quickly. And you actually, with the HECM, you go HECM to HECM, meaning reverse to reverse for the most part, then they don't charge you the mortgage insurance again. So you kind of get a break on the closing costs the second time, which is nice. So hope that all makes sense. Again, if you have specific questions about the programs or what program works well for you or the best for you, then feel free to reach out to me. Contact information is, again, streaming across the screen. All right, next, let's take a look at, those are how the programs work, or the programs that are available. But let's take a look at how folks are using reverse mortgages now. Like what situations what situations lead them to using reverse mortgages, and what are they doing the reverse mortgage to? What's the reverse mortgage going to tackle? So the first thing, that this happens all the time, it's pretty obvious. We use reverses for debt relief. That means if your mortgage is too high, if you've got credit cards, if you've got other bills, and you just need to, you're on fixed income, you're retired, or you're planning out your retirement, and you know that when you retire, your bills are too much for the fixed income that you're going to make, then we do a traditional reverse mortgage. And they're very well known for this. And again, this is kind of common sense, but debt relief and payment relief and increasing your cash flow is one of the biggest reasons why my clients are using reverse mortgages now in 2024. Second, a retirement safety net. Now, let's say that you've got a lot of equity in your home, but you're either drawing down on your investments or assets, or you don't have that much, and you don't have too much in the bank, and you're up at night because if you don't have too much money in the bank, then what happens if there's an emergency? What do? Well, these folks are using reverses as a retirement safety net. So they're using it to either take money and put it in the bank, or if they use a HECM, they're using it to just open up a line of credit, let that line of credit sit and grow year after year after year. By the way, the reverse mortgage line of credit is like one of my favorite aspects of a reverse mortgage. Favorite things. So obviously I've got I'm not going to go deep into it in this video, but I've got other videos that describe how the reverse mortgage line of credit works. So I'll link to those in the description. So that's the retirement safety net. How about buying a home? Did you know you can use a reverse mortgage to buy a home? It's pretty neat. Every single person who uses a reverse to buy their home is happy. So we use it to, as I've coined the phrase, forever size. And basically, let's take a look at, say, a $600,000 house. Well, if you're let's say you're in your mid 70s, I'm just kind of eyeballing this, and you're buying a $600,000 house, then you put down about $350-ish thousand, between $350 and $400, depending on your age and what the interest rate is. So you'd put down a little bit more than half, and the reverse mortgage would cover the rest. Of course, with any reverse, you don't have any monthly payments. So where's the benefit there? Well, if you're buying and you want to stay in your home for the rest of your life, then you're not going to have cash flow implications like you'd have with a regular mortgage. So you would make no payments on the reverse balance part of it. Remember, if you're putting $350 down and it's a $600,000 house, then the reverse covers the $250. So no monthly payments on that $250 at all. And for you, if you don't have an infinite amount of money in the piggy bank, then you're not buying your house cash. So you're not buying a $600,000 house for $600,000. For some folks, that would be too much. That would wipe them out or take too much out of their investments. So you're only putting down, between 50 and 70%, and then you're keeping the rest of the money in your piggy bank. So again, if it's where you want to be for the rest of your life, think about a reverse mortgage for purchase, because you're going to save money, you're not going to spend as much on it, and you don't have any mortgage payments. Again, kind of a complex thing to talk about. So if you'd like to get more info in depth, then feel free to reach out to me. Next, so we've talked about the retirement safety net. We've talked about buying a house using a reverse mortgage. We've talked about debt relief. How about helping aging parents? One of the big things that I've used just reverses on really consistently is for aging in place. If you need a home modification or if you need home health care, that stuff gets really, really expensive. So in that case, we use a reverse, we use your home equity. Basically, there's this saying that says, use your home to stay at home. So we use your home equity to stay in your house. And it's just as simple as that. You take some of the money out of the house, you pay for your home health care, or you pay for the improvements that are going to keep you there for the rest of your life, and you're happy. Home improvements, already touched on that. Again, I've got a client who's going to be using a reverse mortgage to actually a second reverse to build a ADU, which is a second dwelling, on one of her investment properties. She's just basically using money to make more money. And talking about that, I have a fella who just got a reverse, another second reverse, because again, the rate on his first mortgage was very low, and he used the second to fund his business. So if you have something smart that you can do with the money, intelligent, not go to Vegas, okay? You're not going to Vegas and using it, but you're using it intelligently to bring in more money as kind of a business loan, then what other business loans do you have out there where you don't have to make any monthly payments? It's crazy. Fund your business and don't sweat your cash flow. So again, there's other reasons why you would get a reverse. I'm not going all the way down the rabbit hole here, but I wanted to give you kind of an idea of what my clients are doing, what they're using reverse mortgages for right now. Man, this is a short video and I'm parched. All right. So, question. Now that you know how reverses work in 2024, how do you explore all of your options, and how can you make sure that you know that you've explored all of your options with them? Well, you use a reverse mortgage broker. Now, I will say that I'm a reverse mortgage broker, so I'm biased. But here's the thing. Different lenders have different rates. Different lenders have, if you look at the proprietary reverse mortgage, man, the loan amounts are all over the place. There's a 5-figure difference, and a lot of times from lender to lender to lender in loan amounts and in interest rates for the proprietary. So if you're going to shop a proprietary, you better have all of the options at the table. Same thing with the programs. The second reverse and the hybrid reverse, they're only offered by one investor. So if you call the wrong direct lender, well, maybe the second reverse is the right thing for you. Maybe the hybrid reverse is the right thing for you. But if they don't have an option to offer that to you, they might not offer you the right product because they can't make money off of it. So brokers like myself, that's why, at least I can't speak for anybody else, but I think I will. That's why we do it this way. We want to make sure that we have all the flexibility to offer you to really dive into your situation and your needs and make sure that we're getting you into the exact right program. So hope that makes sense. So that's really it. Again, my name is Jason Eichmiller. This is kind of how reverse mortgages are working in 2024. I hope you enjoyed this pretty short video. And if you want to learn more, whether it's for yourself or a loved one, a parent, or a client, if you'd like to see how a reverse mortgage would work specifically for yourself or them, feel free to drop me a line. Obviously, it's a free consultation. If you talk to some of the folks that I've helped with reverses before, there's never any pressure at all. So learn about your options. If it makes sense and if you want to do it, I will do everything I possibly can to help you. And also, if we've spoken before, one thing I do is if I can see that you can't get a reverse, it doesn't make sense, you owe too much, there's other reasons why people can't get reverses. If it seems like it doesn't make sense or you can't get a reverse, I'm going to let you know immediately so you don't have to go down that rabbit hole. You'll be able to eliminate this as an option. I think that's powerful. I mean, it stinks to not be able to do something, but to know that you can't and to be able to pivot to, okay, well, I can't do this. Now what can I do? I think it's really strong. But again, for the folks who can get reverse mortgages, who need them, and if you want me to help, man, I'll do my very best for you. So again, my name is Jason Eichmiller. My contact information is flashing below, but phone number is 888-309-9705. You can email me at jason@keyhomelending.com, or you can just visit, if you like to schedule a time to chat or see some of my reviews, go to www.reversequotes.com. Thank you so much. I appreciate you very, very, very much. And I'll do my very, very best to help you. Take care of yourself, and happy 2024.